What's going on, everybody? It's Joe Giunta with Trend Trading Academy. I'm here to help you trade and get paid. And guys, in today's video, I got another big one for you. Look, the world's going crazy. The world's going crazy around us. All right? And guess what? That means the markets are going to be crazy too. So how do we trade in an abnormal market? How do we trade when the market isn't doing what it normally does? Sometimes we get faked out. We get tricked. Maybe it goes in the direction we think it's going to go based on technical analysis, but then something else happens. Maybe gaps, maybe corrections and extensions that we weren't expecting. There's a lot of different things that happen in the market when the market is not moving as it normally does. So I'm going to show you today how to make big profits even when the market is abnormal. So if this video brings you value, don't forget to like, comment, and subscribe. Hit that notification bell so you get notified every time we drop content. And if you're ready to take your education to the next level, I want you to go ahead and go to trendtrading.academy, become a student, jump on board, and let's make profits. We're doing this thing together, we're winning together, and you can too. So for now, let's get to the charts.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trade and get paid, 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 trade and get paid.
Looking at last week's analysis, we were in this little triangle here, remember? And we were waiting for the breakout, and of course, we had the wick trying to go up, wick trying to go down, and of course, we had this retest over here on the coming to the top of our major mid zone at the 192.30 mark, and it tried to push through, retested, tried to push through, and then pulled back down. We had that big move down because, of course, as we were trying to break through, we had some bank news push us way down as the week was getting ready to close. So we decided we were going to wait for the correction. We got the correction right up in here and decided we wanted to see what was the next thing that was going to happen. Well, on that correction, what we saw was about a 25 pip actual after the correction, and then so essentially what we have here is this move here, this little sideways movement, and then that move up, and then we had that move down, and then we had that move up right here. What if we were to look at that like up, down, up, and stick it before the actual news happened, we would be looking at up, down, up. Okay, so we're seeing how we would have broke our line. So because of the news, that up, down, up did not break our zone, which, if you remember in last week's class, I told you this: because we went up in this wick here and major selling pressure said, nope, push it back down. So then the selling pressure brought it all the way down to here. And then the buying pressure said, nope, push it back up. We had major indecision in the market with those two wicks. So because of that, I told you guys, it is going to take a major strength move, a big time move to get out of this zone. And sure enough, exactly like we thought, we had a major move that pushed us out of that zone. Major. I mean, this was a lot of movement here. About 140 pips or so, 150 pips to get out of that zone. So let me spread this out a little bit more for you so you can see it a little bit better. So, of course, again, just to recap, retest, tried to push out. It wasn't able. We were coming to the close of the week. News pushed us down. Correction came. We had 25 pips to make up, down, a lot of indecision because we didn't know what was going to happen, move back up. And if we would have placed that same movement at the end before the news, we would have had up, down, up. So we'd have been somewhere right in here, which if we look at that, it's kind of funny. If we were to look at that, look at where 25 pips would have put us. 24, 25 pips would have put us just above the line, which is exactly where this movement would have been. Up, down, up. It would have put us just above the line. Up, down, up. Okay? So that correction was, it proved to be true. Indecision in the market happened, and the up, down, up, instead of putting us above the line, it had us testing the line, which essentially needed a strong move, just like I talked about last week. We needed major pressure to break the line. And now going back a step further, we had our small flag, our small, triangle that we tried to break in both directions and couldn't. Then we had to wait for the bigger triangle here, yellow line, pink line. And at the very end, we finally got the breakout. Okay? A little bit of market manipulation there, a little bit of price action, and then a lot of buyers getting in the market. 150 pip move got us all the way up. Now, obviously, we can't expect 150 pip moves over and over again. So every abnormal move, whether it be news, whether it be market manipulation, whether it be, bank manipulation like that, every major abnormality has to come with correction, correct? So what do we have here? Let's box in just like we did down here. Let's box in our correction. Okay? We box in our correction and we cut it off. That doesn't count because we know that wasn't real. So we have about 95, 96 pips to go. So I would say safely 90 to 95 pips. Okay? So because we cut off the top, because we cut off the extra, market manipulation, get us out of the zone, major pressure to get us out of this middle zone, then the correction. So what was the actual plan? So in other words, here's what happened. Here, brought it back to normal. Here's normal. The bottom of that correction is normal. So let's drop a line there. Bottom of that correction is normal. So this was the intended move from pink line to blue line. And we have about 90 to 95 pips right in there of movement that was intended to happen. So we take this out and we let this pick up where it left off. Okay? So we have up, correct, pull back, up, and now we're starting to pull back again. No, here's what I find to be highly interesting. Remember, if this was intended to be 95 pips, we're at the top of that red, we're at 66. So another 30 pips. Look at that blue line, right? That blue line right there is 90 pips, 91 pips. And if you go just beyond it, 95, so right around that blue line is giving us 90 to 91 pips. I want to show you something really awesome. Let's look at where that blue line comes from. Scroll back a little bit. Look at this major zone right here. If you drop this major zone from here to the top of that wick, right? Minor zone, I'm sorry, I didn't mean to say major, minor zone. You take that right here, that little zone right there, okay? We know that that's the next major level or minor level of support and resistance that we have to face. So essentially, when we look back at it like this, notice that this was before that big bank manipulation too. So it comes up, pulls back, and then the bank, and then the big news from the election. When we come back to that, that is going to take us right into that zone, and that 95 pip move off of the correction takes us right into that. And at the very top of the zone, we're at 95, 94, 96 pips. Literally, it's just exactly what the market was supposed to do, minus the correction. So essentially, we knew, the banks knew, we didn't. The banks knew that they needed a 95 pip move. That was what was going to happen. And so, but they couldn't do that before breaking out. So they broke out, corrected it, and then gave the 95 pips from here to here and split the move in half. So rather than going 180, they did 150, pull back, and then, you know, gave you the other half of the trade. The bank said, I want to make money. I'm going to sell. I want to make money again. Pretty awesome. That cutoff strategy of cutting off the tip of the news, it works like a charm. It works every time. Every time you see big manipulation in the market, anytime you see the massive engulfing candles that are not normal, not regular normal candles, if you just wait for the correction, cut off the correction essentially, because that was not intended, come back to the intended price, and then ride that amount of pips. That's going to give you profitable trading, probably 70 to 80% of the time minimum. Okay, so that's what's happened right now. That's what happened here. That's what happened here. And going all the way back here, that's what happened here in a major way. Okay, on top of that, let's take a look. I'm just giving you some market analysis here. I want you to notice where strength took off from. We were facing the top of a major middle zone, and we were also coming off of our most recent trend line. So it had to either go up or down, and strength pushed it right off of our zone. Literally, it was like, you know, bouncing around inside of our baby triangle here, and just shot up right off of our trend line. Those lines that we made, and those of you who've been on our, you know, in the class for a while, you remember when I made this line several weeks ago or whatever. You remember when I made this line. You remember when I made this line. And over again, price is respecting the lines we're making because we're simply using price action strategy, understanding supply and demand, understanding the quarters theory, understanding how banks make money, and essentially rolling with the banks instead of against the banks. So this stuff is like a cycle. It happens over and over and over again. We don't need for the, to force the market in any direction. We don't need to be afraid or anything like that. We just need to be patient and wait for certain confirmations. Now, I haven't even used a Bollinger Band or my EMA yet. Okay? I haven't done that yet. With that, when I open up my indicators, look at that. Pushed out. As soon as you see it close back in, you know the next candle is going to be red. Boom. Comes down, pushes back to the top. Next candle's red. We're about to see a pullback to the middle Bollinger Band. How do I know that? Well, remember, we trade the 4-hour chart, but we get our information from the bigger chart, right? We had big move, we had correction, we had push up. Now we're waiting for a pullback. If it pulls back down into here, wouldn't this make sense if we continue to drag this trend line? If we pull this back down into here, into this area right in here where the blue line is, then we can start pushing back up. Well, if that's the case, if it's pulling back, look where my EMA is. I mean, this stuff is like mind-blowing. It's mind-blowing, guys. Literally, it's pulling back up, and if we know we need a pullback on the weekly, then the 4 hour is going to start moving down before the weekly moves down. We're already seeing a wick on the weekly, which means that we're going to see this pull back to middle Bollinger Band, because Bollinger Bands tell us that the price is always going to try to come back to middle. So it's going to pull back minimum to yellow, probably to the trend line, and it's going to pull back before taking off again, because this was not the whole move. Only this part of it was. So 95 pips up, pull back, 95 pips up, pull back, 95 pips up, pull back, and it's going to continue to climb on our trend line until it tries to get up here or breaks to the bottom of our trend line and ends up retesting and going into this outward triangle. So instead of coming into the end of a triangle, it comes into this outward triangle and starts to break downward. We're not going to go high, low. We're going to go high, low, right? Let's look at it. Let's look at it this way, right? We're not going to look at the correction. We're going to look at what was anticipated. So high, low, high, right? So now watch this. When we take this pattern here, let me get rid of this. When we take this pattern here, what was the correction? We go high, low, high, okay? And we bring that back down to where we know this would have left off, not from the top, but from where it would have left off. It brings us to the same place. It brings us right back to our correction zone within just a few pips, okay? It literally brings us right back there. And look at where the retest is, right on our middle ball, right on our EMA. It's respecting the EMA, absolutely, yep. And so because this happened up here instead of down here, why? Because of this bank manipulation, it happened up here instead of happening down here, right? So now, if we're going to continue that, we can kind of move this over a little bit so you can see it a little, only so you can see it better, not to move the zones. But if we were to continue that back here, look at where A, B, C, D takes us right to the top of the zone, right? A, B, C, D takes us right to the top of the zone. So this stuff is literally copy and paste at this point. You know, this stuff is literally A, B, C, D, copy it, show us where the next move is going to be, right? And at some point, once it hits this level of resistance in this zone, it's got to get into this zone, and then it's going to pull back. It's going to try to come back to our middle or our EMA. Essentially, it's trying to come back to our middle Bollinger Band. So it's going to come back here. Our EMA is literally right on our blue line. And then it may try to get all the way down to our middle Bollinger Band. Look where that is, right back at the top of that zone, because this pulled out, but it never really got to retest this zone. Why? Because this was the retest. But because of this bank manipulation, it happened up here and not right here. Now, again, let's look at this real quick. At the top, if this would have happened right here, that where this was supposed to happen, notice how we would have gotten a retest of we broke out, retest, and pushed up, right? We would have gotten our retest of the breakout. It would have pushed out, retested like it was supposed to, and pushed out. But because the manipulation of the market, it happened up here, and we pushed way out, and our retest was not really retesting this line. So essentially, in order for us to stay above this, we have to, because this is the way the market works, we have to retest this zone. Right now, this is not a true breakout until we retest this. Is everybody with me? This is not a real breakout unless this has a retest. And because we were not able to truly get a retest because of the correction and of the manipulation that happened here, we have to eventually get a retest. So it pushes up into this zone before pushing back down and trying to come back to our middle Bollinger Band, which will be a retest of our yellow line. So push out, retest, push back up. Or push out, retest, and ends up breaking and going into this triangle. All right, guys, there you have it. This is the correction cutoff. So when the market does something that is abnormal, when the market has a large spike or a gap, or does something that is abnormal and moves basically due to news or some fundamental aspect that was unexpected, all we got to do is wait for the correction, cut it off, and go back to normal. It's just that simple. Really, the market shows its hand every time. So if we apply this principle, we can understand that technical analysis comes first. It always trumps everything else. It always supersedes everything else. And the fundamentals, the sentiment, they play into the technical analysis. Many times those things, they delay, but they don't deny the technical analysis. It's stuff like this and more that we're doing in the TTA live classes. So if you thought this was great, this was actually only a piece of a much larger, about an hour-long private class in TTA. So you can join us there, trendtrading.academy, and you can get the full class. You can get everything else that we got going on. I promise you, you're not making a mistake by becoming a TTA member. You know it's worth it to become a student. Why? Because we invest in ourselves, right? You see it? Invest in yourself. And if you want to get that merch, all you got to do is go to tradinggetpaid.com. Get the merch, you get the hats, the shirts, and most importantly, you get yourself your journal and get your trading structured. Man, I promise you, just go look in the comments. Go look into people that are posting about it. The journal is fire. It's helping so many people already, and we're only into the end of January. All right, so go get yours today, tradinggetpaid.com. Don't forget to like, comment, and subscribe, and I'll see you in the next class.